What's up guys, welcome back to my YouTube channel. My name is Andre and today I'm going to show you something that you definitely need to add in your boom and crash or your synthetic trading on the Riv in your toolbox. So you need to add this in your toolbox as an extra piece of confirmation or extra piece of trading knowledge that you need when you see something on the charts that you're not sure of. But let's quickly just go through an example again of an easy example, an easy trade, like I usually explain to you guys, or I usually try and show you guys how to identify these trades. I'm going to quickly show you guys an easy one, and then I'm going to head off to the more difficult one where you have to add that extra thing to your toolbox. Okay, so we are currently on crash 300, and I found this trade to show you guys exactly how nice it is. Usually sell on crash and usually buy on boom, but I know some people like to do both on any one of them, but I like to sell on crash and buy on boom. So let's quickly look at this chart, right? So we've got these equal lows here at the bottom. Really doesn't matter as where you draw this line, but let's just put it through all those lines like that. And when it makes this market structure shift to the downside, we know we are looking for sells, okay? So when it breaks down through these lows, we are going to look for the perfect sell opportunity. So what I'm going to do is I'm going to take the Fibonacci tool. I'm going to draw it from the top there to the bottom of this move, like this. And I'm going to try and identify the order block in the 78 to 61 zone. You can even include the 50 if you want to. I've been asked that a few times now, but you can include the 50 if you want. But the perfect zone now on the 1 hour here is going to be between the 78 and the 61 zone. So now that I've identified this, I'm going to delete the fib because it's just a lot of noise. I'm going to delete this line over here, just a lot of noise because I've identified it now. So in this purple block, I do see a piece of green candle in it, like that. So that still counts as an order block or an opposite candle before the trend started downwards. So I'm going to include this order block as well in this trade. So now I'm going to delete this block because I've identified the order block. And now I have it over here. So now what I usually teach you guys is to go down to the smaller time frames, because you can enter a trade anywhere there if you want to, but your stop loss is going to be a little bit too big. Okay, so let's quickly check it in here. So now when we look to the left, so always look to the left, we can see that there is a few order blocks over here. So you can technically draw them out. I'm going to delete the bigger one again, draw them out again, and draw this one out as well. So now you will see how that trade looks over there. So one of the things that I like to do extra is it's probably going to be the order block that hasn't been retested at all yet, where this one, for example, has been retested with that one, and it usually most of the time goes to the top one. But if you want to be completely sure, instead of entering randomly on these three order blocks, just go to this move now and wait for another entry on the smaller time frame. So take the top to the bottom like that and wait for a 61 or 71 retrace, and probably enter more on the 61 than the 78, because you can probably withstand a little bit of a drawdown to the 78. So let's say you enter there. I'll put my stop loss just above that high, and obviously take my TP to wherever you want, to this next low over here, or use your Fibonacci retracement lines as your TPs. So that's a nice solid example. I like this example. It's actually, you can see why it reacted to this little red order block. It was just a little reaction that made it go upwards again for that next move downwards. So this is totally normal to see, very normal to see, and then you can enter on your Fibonacci tool there. So I would rather take the Fibonacci tool, but it's nice to see these order blocks there. But let's quickly go now and add the toolbox that I'm going to show you guys. So if I'm going to go here, I'm going to go boom 300. Just waiting. I've already got it drawn out over here to save some time. So you guys will definitely see that we've got this broken high over here, So we will then obviously take the Fibonacci from the low to the high, and I will draw a block in the 61 to 78. Okay, so now I would delete the Fibonacci and I would then delete that little box. I'm just going to show you guys now. So what Forex charts do is they usually, when it's a situation like this, trading has a way of doing this. It's called accumulation. So when a trade does this, it basically consolidates in an area, does like a fake breakout to the downside, and then continues its correct direction, the direction it actually wants to do. So it actually kind of grabbed liquidity in that area. I hope you guys can see this. So that is like called I don't really want to call it a fake out, but some people understand the word fake out. But that's where the banks or the institutions will have their buy orders placed and take out all the buyers with this stop loss hunt. The banks have enough money to withstand this little bit of a drawdown before it goes into the correct direction that it needs to take. So always it's a consolidation downwards, and it then goes up into the direction it should. You guys can go check it on your charts. You'll see it quite a lot on there. Okay, so let's quickly delete this. And now, so for this example, this is what I mean, is you will have your fib ready, you will have your block drawn out, but you won't actually find proper order blocks on there. So now you're like, oh, but I see this trade and I see it's going to go up. You have a little bit of a few order blocks, but there's like 1, 2, 3, 4, 5-ish order blocks there. Where are you going to find this entry? So now you will see this consolidation area over here. This, let me delete this. This consolidation area over here. This breakout to the downside, and then the actual continuation up. So we're not going to look for sells here because it's boom, number one, and number two, your higher time frames said it was going to be a buy. So don't confuse this fake out as it's going to sell. We're going to wait for the sell fake out on boom first before continuing up. Okay, so let's draw it like this. There you have your little fake out area there, or liquidity grab, whatever you want to call it. I'm not going to confuse you guys too much with the terminology. So now we see it moving upwards. It's even breaking this high as well. So now we will just take the fib again from the top to the, from the bottom to the top, and enter close to that 61 area. And that is where you then will enter your trade. Obviously also a fair value gap in that area as well, if you want to spot it like that. So if you like your fair value gap, if you know how to spot them, that's perfect to check it out. So you have your fair value gap, you have your 61, you have this little thing that I just taught you, this little extra thing in your toolbox to show you another way to enter a trade, to make sure, okay, wow, it actually did this. It's going to go the true direction now to the upward side. Okay, so I hope this helps a lot. I'm going to definitely make more videos on this concept, a little bit more in depth, so that you guys can understand it more. So this is just a quick little thing that you can add to your toolbox. If you see this type of movement down up, okay, for a boom pair, and then the opposite for a sell pair, which will be something like this. Okay, cool. So hope you guys enjoy. Like and subscribe. I'm gonna make a lot more content on this. Join my free group down below in the description, and I will see you guys there. Remember to check out FundedNext as well if you want to be a funded trader, one of the best prop firms out there. So I'll check you guys in the next video.